Guys, we do have major news. Two huge banks, Bank of America and US Bank, are set to integrate crypto. Yes, it is stablecoins, and it is because of the recent passage of the Genius Act. The Genius Act hasn't actually passed completely. It's passed the Senate. It's going to the House, where it will probably pass because the House is probably going to get like 70 or 80 Democratic House members to actually sign it with the Republicans. And of course, Trump is going to sign it. So it's going to be there. But this could actually detail a new era of crypto because these are really, really large banks. Now that Operation Choke Point 2.0 is gone, they are wanting crypto integration. And if they actually get people onboarded these stablecoins, it's then easier to get those people who are now onboarded the stablecoins to onboard into real crypto. So in a transformative development for the banking and cryptocurrency sectors, Bank of America and US Bank have announced their readiness to engage with stablecoins, and that signals a significant shift in the financial landscape. Why? Because, banks were always seen as being afraid of crypto, that they'll take away their power. Why have they changed? Well, not hard to see why they've actually changed. It's because they see the inevitability of stablecoins on the wall. Note that they are not integrating any other cryptos, not even Bitcoin, but just stablecoins. They see the writing on the wall. They see that Congress and lawmakers are passing big stablecoin regulations. They see like other smaller companies locking up with these stablecoins, and they see the transformation in like developing countries where people can't get access to the US dollar and they're really wanting to get stablecoins. They see that and they know that there's a huge amount of business opportunity there, that if they don't take advantage of that business opportunity, they are going to be left behind. And they obviously do not want to be left behind because they understand there's going to be trillions of dollars at stake in the future in this market. And obviously, every company wants a piece of the possible trillions of dollars. The move comes as U.S. regulators work toward establishing a clear framework for stablecoins, a step that could enhance the legitimacy and integration of digital assets within traditional banking. At a recent history conference in New York, executives from BOA, U.S. Bank, and Fifth Third Bancorp expressed their enthusiasm for stablecoin adoption. Obviously, some of these banks might want to issue stablecoins themselves, as many of these tech companies have signaled that they are interested in integrating the stablecoins kind of into themselves as well. So they emphasize the necessity for the banks to adopt the evolving financial system, stating, we have it, the industry has to have it. Now, you might be thinking, well, Jamie Dimon really doesn't like crypto and he's not going to integrate these stablecoins. I don't think that's the case. I think competition will force Jamie Dimon to integrate these stablecoins. When Bank of America, Wells Fargo, and all these other big banks integrate stablecoins, there is no way that Jamie Dimon is going to prevent JP Morgan from doing it, because if he does, those investors are going to riot because they're missing big out on a big market, and other banks are going to take away their market share. Like I said, this is good for overall crypto, even though they're not integrating Bitcoin or anything, because many DEXs, where a lot of people do their trading now, their main thing is like they have to get people from USD to USDT and USDC to actually invest in crypto. And that could be a crucial step. Well, if BOA or US Bank or JP Morgan or Wells Fargo are already doing that, then that is one step eradicated. And that could actually talk people more into trading Bitcoin itself. And I think people are already getting more comfortable with that because of the idea of the ETFs. And so those two things working together can get some of the fringe players to really think twice, get into not only Bitcoin, but some of the altcoins as well. Pretty sure they're looking at USDC right now, as that is the primary one in the United States. If they have international endeavors, they might be looking at USDT as well. Remember, the DOJ just commended USDT for working with them. So the DOJ is no longer against Tether. With the Genius Act passing, if they don't write any amendments to it, which the House might actually do, they might actually like put some provisions in and let USDT back in. Kind of doubtful, but USDT could also make a separate version for both Europe and the United States, because obviously MiCA will not allow USDT in. So the backdrop for this renewed interest is the impending passage of the Genius Act, which means Guiding and Establishing National Innovation for U.S. Stablecoins Act, which aims to create a comprehensive regulatory framework for stablecoin issuing and usage. So this is like a big thing for industry. I don't really know if it's huge for the investors, but like I said, it can actually onboard people to stablecoins. And if they onboard people to stablecoins, I think it'll onboard more people into crypto. So it's overall a good thing. It's a bipartisan initiative, represents a stark contrast to the more cautious regulatory environment seen in the previous administration. During the conference, Mayochen noted that the previous ambiguity surrounding banking regulations had stifled innovation, stating it wasn't clear we were allowed to do it under the banking regulations. The anticipated clarity from the Genius Act is set to encourage banks to explore new business opportunities in the crypto space. And Bank of America has engaged in discussions with other banks, including JP Morgan and Citigroup, and JP Morgan has been one of the major holdouts because of their CEO, regarding the potential for a joint stablecoin initiative. So part of the reason they're doing this may actually be because, and a large part of the reason, honestly, they want to make their own stablecoin. And obviously, like, they're going to integrate the stablecoin technology if they want to make their own stablecoin. Now, it's not sure what chain, if any of the public ones, they're going to make their own stablecoin on. And I think a lot of people will speculate it's on this chain or that chain, but it could honestly be just on their own private chain. And you shouldn't be too disappointed if they actually do that. The collaborative approach would facilitate the development of standardized stablecoin that meets regulatory environments while serving various financial needs. The CEO of Fifth Third Bancorp highlighted the efficiency gains that stablecoins could bring to international payments, stating, "We think that there are some interesting places where stablecoin can really create some efficiencies in the commerce space. This sentiment underscores the bank's focus on leveraging stablecoins to enhance operational capabilities." So that's good. So Gunja Kedia, CEO of US Bancorp, shared insights into her bank's previous attempts to introduce crypto custody services, which struggled under certain regulatory conditions. Obviously, the uncertainty no longer exists at this point, especially with the passing of the Genius Act. So they're able to facilitate this a lot more. Of course, she's saying the product is back and we are able to provide it. And US Bancorp is exploring how it can utilize stablecoins for payments, with Kedia emphasizing the importance of adopting regulatory developments and shaping their strategy. Now, obviously, this is all focused on US dollar-pegged stablecoins. And obviously, the US wants to promote these stablecoins to ensure US homogeny in future currency, and this is the way to actually do it. I think that's one of the reasons Donald Trump wants the Genius Act actually passed. Obviously, he has his own interest in crypto, and he's going to make a lot of money in the crypto, and he has a stablecoin himself called USD1, which launched on Tron. So obviously, he has personal financial interest in it. But overall, this should definitely be a positive for the industry. And of course, like, this puts the US on par with Europe and their MiCA Act. So, like, both of these are basically hammering out global stablecoin regulations, which definitely should help the industry basically prosper globally. I do think MiCA is a little too restrictive. Maybe the Genius Act is, but at least it gives like some kind of basis for crypto companies to work with. So people have to, like, all the cryptos have to make sure they have plenty of USDC slash USDT or other stablecoin pairs, because they're going to be huge onboarding gateways for crypto in the future, and those that don't will actually be left out. I personally think that after this, all these major crypto networks, talking to you, Charles, will actually want something like USDC on their network just for much easier onboard. Because I don't really know, if DeJed's really going to go big term, or even RLUSD, or USDM, or all these others that you're integrating. But we know that USDC has already set the tone. So, like, you gotta have either Tether or USDC on your chain if you are a major chain and if you want to be a major player. But really a good piece of news. Banks are integrating it. They're gonna bring the regular mom and pops on, and that could be great growth for our industry. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.